Hey, thanks for tuning in again. This is just another video about why I think this recession or supposed recession is not over, and this is just the beginning. So here's a chart looking at MSCI World, and if you don't know what that is a index that represents large and mid-cap equity performance across all 23 developed market countries, and it's about 85% of the free, fully adjusted market cap in each country. So what this graph is looking at is the prior recession from back in 08 and 09 in orange, and the blue line is where we are currently in the market as of about a week ago. So for all those people that are saying in the news that, oh, this time it's different and this time it's not going to be like last time, just take a look at these graphs. I mean, for the first part, they look pretty darn identical, right? So we're around this area right now, in my opinion, as of today. So we're rallying a little bit back up. Maybe this is a bull trap, but this is where I think we're going to go. I think we're going to fall back even below the March 23rd lows. And then when we get to that point, maybe we will bounce back up a little bit, but I think we're going to come back down, maybe bounce up, come back down. But my whole overall point is I think we still have a ways to go in the market. I think we have a ways to drop. So I think a lot of people like myself are holding a lot of cash reserves because we know, or at least we think, that stocks are going to get even cheaper than they are now. So we want to get in as close to the bottom as possible. Now, if you want to play it safe, you can start buying incrementally, maybe every month or every 2 weeks, start putting a little bit of money into the stocks or the index funds that you're looking at. That we can dollar cost average down, so that way you won't miss the bottom per se. But although I think it's a good strategy, I think we still have a ways to go. So I'm going to keep waiting maybe a few more weeks until I start dollar cost averaging down. I mean, if you take a look at this orange graph, let's say this is March 23rd, 2020 in terms of the current economy. But in terms of the prior recession, from this point to really the market bottom, if you look at the dates, there's still quite some time there, right? That's why I still think we have a few more weeks or maybe even months to go before we really hit rock bottom, and then hopefully slowly start the rally all the way back up and hopefully hit all-time highs. But again, this is just my opinion, not financial advice, so just do your own due diligence and make a plan and see what you want to do. But I really think if you start dollar cost averaging down into index funds like SPY, or if you like the Vanguard funds or the Fidelity funds, maybe the total market and a combination of the international market or the S&P 500 or maybe even the Russell 2000 or small and mid-cap stocks, I really think you can't go wrong, because as you slowly dollar cost average down, you'll make all that profit back in the coming years as it gets back up. All right, thanks again for tuning in. Just let me know if you have any comments or if you have any suggestions for other videos that you'd like me to make. And thanks again.